Good evening, everyone. My colleagues, both Padmaja and Sumit, they've given a great context to the session right now. We've been talking about the mood, the economy, the tone, the sentiment. We are no longer using the word achhe din, but at a time when the world is shaking, where are we headed? There is no gloom, but there is certainly no boom. But the startup world, they live in a completely different kind of an ecosystem. The startup world has been growing. Bangalore represents the real ethos of the startup system and what exactly is the reality in the startup system. So to understand a granular mood and to get a deep understanding of some key startup trends, let me start with you, Meena. The economy is in a pain, but each morning it's great to see that startups are getting funded, valuations are going higher. So is the startup world feeling the pain of what is happening to the real economy, or that's a different orbit?
Well, the startups are very much part of the real economy. What they're doing is that they're coming at the problems that are there in the economy or problems that are there in the real world just from a slightly different perspective. So, a big basket will disrupt how grocery is consumed, but it still is a grocery company. What it brings in is a completely new format to do that. So at the end of the day, whatever happens in the consumption in the economy will have an impact. Now, what is different though is that because they are using technology, because they are using new disruptive models, they're able to eke out a higher growth than perhaps the real world or the offline models do. So same thing is true for whether you look at Portea or you look at some of our other companies. They are solving an existing problem in the healthcare industry, or with Verloop, which is a AI/ML company. It is solving real problems using technology, and hence it gets visible and hence it gets further focused upon.
When you value a startup, you look at the ability, you look at the talent, you look at the growth, you look at the big picture. Given that we are going through trade war at a global level, which will challenge growth, slow down at the local level, are you looking at revaluing the businesses? How are you changing your mindset as an investor in this kind of a regime?
Firstly, I want to clarify, I'm not an investor, I'm a promoter. So all these companies are set up by us, and we work along with investors, financial companies, PE, VCs, etc., who invest alongside this. The second point is that valuation is not necessarily based only on the market and the team and so on. It's also a demand-supply issue. So there are a few companies which are doing extremely well. There are a few companies which are scaling and becoming very large. Then there are a lot of people who will chase them and will want to put money in them. So valuation is not something which is, it's not, I can't explain it scientifically saying these parameters change, valuations will go down. Companies may still do well, but still valuations may not go up. Now, currently, in the last few years, there was a little bit of a downturn in terms of new investments coming in, but that tide seems to have turned, and in the whole of 2019, from the beginning, we are hearing a lot of big ticket investments that are going. What the expectations, though, are changing from the investors is a lot more of maturity in the companies. They want to see companies which not just grow, but companies which have a path to profitability. They are creating real money. Those are some expectations which are great because that leads to real maturity, and those are the real metrics that we should all be focused on.
Adhil, what's the news at your end? You represent a fintech at a time when there is I'm sorry I'm using the word slowdown again, but that's the word which I think resonates with the current mood right now. There is a slowdown in the financial market. NBFCs are not funding. You are a disruptor. Disruptors and efficient disruptors, they gain during this time. What's been your experience?
Yeah, let me answer that question in the context of how is the real world affecting the fintech digital world. So at Bank Bazaar, we see two sides of the coin. So we're seeing the consumer wanting to consume financial products, credit, loans on their mobile phone. They don't want to wait in line. They don't want to submit 10 pieces of paper and find out later. They want it instantly based on consent. One side. The other side, right, is the lenders, the NBFCs, the banks, and Bank Bazaar sits in the middle. So very interestingly to your earlier question, right, on the demand side, we see things skyrocketing, 100% per annum. All the consumers are coming. We're getting 400 million visitors a year, and that's scaling up very dramatically. But we have to marry it with the real side, wherein on the lending side, there is tightness. You know, people are evaluating, can I lend to millennials? Can I lend to near prime? And we have to marry the two. So I think it's a very, very interesting time wherein demand and consumer is on a startup skyship, right? And on supply, it is a real world economy. And as a digital business, we need to manage these two while still achieving growth. I think one of the things we've really been pushing for is the government has been asking fintechs, what do you need? And what we've been saying is, see, our opportunity is we can distribute financial products all over India on a mobile phone without a piece of paper. Please enable the regulation around digital KYC, video onboarding, such that in this downturn, the digitization of the economy can become faster. So the economy or the financial industry might be slowing down, but the digital part of that should grow in this downturn. And I think that's been what the fintechs have been asking the government.
Okay, I want to throw in the most important aspect of financial lending and borrowing, risk. The digital startups, we've never discussed that on a public forum. How exactly are you proposing that you will be able to manage risk? Like you said that demand is there. It's very easy for banks and startup to give money. But risk is, how do you recover it? What's going to happen on that front?
So great question. I think the data, and today Bank Bazaar is an 11-year-old company, data clearly shows that the digital portfolio performs better than an offline portfolio for two reasons. So one is this is a consumer coming themselves, giving their details themselves, and giving electronic document submission. It's really easy to forge a paper bank document. It's fairly impossible to forge a document based on consent being retrieved from source and being digitally underwritten. It's fairly easy in a real world to talk to someone, to influence, but if it's a digital system that's using your digital income tax data based on your consent, it's hard to forge. So the irony of the situation, right, is portfolio-wise, bank after bank, NBFC after NBFC, they're saying that these are tough times, but even in these tough times, right, from an NPA perspective, the performance is significantly better. And I'm talking about not, single-digit percentage, but high double-digit percentage of improvement on NPAs over offline.
That's a great point. I'll come back to you on that point, that why this is happening. Karan, characterize the environment for us. Is it good? Is it okay? Is it very good?
It's definitely extremely innovative at this moment in time. I think that
very good. Okay.
I think it's very good, between good to very good. But obviously, something that you guys touched on, that the real world does affect how good it can be. As much as innovative and as fast-moving startups are, they still are dependent on real markets and consumer behavior and being able to raise money and things like that. The first thing that happens, I guess, when there's a slowdown, people get conservative about where they're putting their money, and putting their money in something that seems to be high risk or not understood as forward thinking, but really, to understand where cash flow is coming from, and if this business is going to have profit or whatever it is, you much rather put your money where you're going to see your money coming back. And so if you really see the slowdown, it will affect someone who's trying to build something that is extremely high growth or high risk in someone's view, and that will have its own effect. But just like an entrepreneur's mindset, I think that because you're in this environment that is kind of constrained by no rules, you're able to innovate your business model and be able to adapt to the situation faster than maybe a larger organization, which kind of gives a startup some sort of an advantage. But at the end of the day, it is a much smaller size with less resources to be able to probably not last as long as a large organization, and that ends up becoming the case is like the fittest survive, and then the people with the business model that isn't actually able to sustain cycles of the economy will sort of move away.
So you've given a great answer without using the word WeWork India. What we want to know, what is happening to your business, because you represent the commercial real estate space. You are, in a sense, have the pulse and the mood of where entrepreneurs and where largely, the corporate India is moving.
Mm-hmm. So, I mean, we've not seen a slowdown at all in terms of the office market. I think anyone who understands real estate there is definitely a slowdown in terms of residential, but in terms of the office market, it has been booming for the last, I don't know, like maybe 20 years. We were just talking about it. We actually have a great mix of really large corporates, or enterprise as we call it, and also startups and these mid-market businesses, both of which we see actually moving and growing as fast as possible. And in an environment of volatility, I think that flexibility and having to keep morals up, or the energy of your employees up, becomes even more important, which is why a space like WeWork, or the model like WeWork, actually ends up becoming a place that people gravitate towards. But in terms of cost of acquiring office space for these large companies, I think India is still, the biggest demographic in the world, youngest people, English speaking, highly educated. So if there's any place you want to really double down, it's where you're going to get cheap, really good talent that can deliver higher output for you. And India, in the scenario of the world, ends up being in a very unique position to actually capture all of that. So we are not seeing any slowdown, at least in the office market or in MNC growth or people hiring. In fact, we're actually seeing it increase.
Okay. I'm optimistic after the startup panel. I will not use the word slowdown for the next question. Tell me the reality. You analyze small startups. You analyze not only technology startups, but SME, MSC levels. You're happy to partner with them. What is the pulse you're getting?
So as Microsoft, we are very, very bullish in terms of the startup ecosystem. I think there's a lot of investment being made by us globally in terms of engaging with startups. I manage the Middle East, North Africa, and South Asian country regions. And what's really heartening is all of these countries are looking at India. They look at the India success stories. They want to understand and learn from India. Today, India has 26 unicorns. We are looking at getting to 100 unicorns by 2025. I think as Microsoft, we hope that we can actually start finding unicorns coming in from the tier 2 cities. Every government, every state government today is investing in a startup policy, investing in helping and supporting startups. And from a technology perspective, just last week we signed a very large deal, Microsoft and Jio, in terms of moving small businesses, startups to the cloud, rapidly. So we absolutely believe that startups are here to stay. I think the agility that a startup shows is far higher than many of the large enterprises. I think the enterprises, the traditional brick and mortar businesses are coming to us to understand how they can engage with startups for their digital transformation story. So I'm very, very bullish, and I think what will change, of course, is the fact that the investors are going to look at more mature teams, not just go after crazy valuation, and make sure, to Meena's point, that businesses are being run profitably versus just a lot of cash burn. So the move from B2C investment to B2B is very high. We are engaged very heavily with the B2B startups, helping them take their products global. We have a very strong co-sell motion where we take our most promising startups to our enterprise clients global. So I'm very, very bullish in terms of how the startup economy, it will survive even a downturn in many ways, because agility is what you would need, which a startup would have.
Okay, it's great to hear there is no slowdown in the startup world. But if I compare the real numbers, look at the unicorns China has. Let's not compare China, let's compare Israel. Why is that India is lacking that many unicorns? We have talent, we have skill, we have population, we have demographics, a supportive government, great investors, companies like Microsoft, but...
So yes, China is definitely very different, right, from the rest of the world. A Series A funding in China is 15 to 20 million. In 6 months, they all get unicorn status. We're still trying to fathom how that happens in terms of the valuation. Israel has traditionally has only built to export. There is absolutely zero market in Israel. So as a result, the forces have all come together, realized that Israelis' tech talent, especially in the areas of security, deep tech, is extremely high. So they also get funding much easier. In fact, the Israeli government supports startups to fail. They give startups, they say, come in, it's okay, your first time, you have a great idea, it's okay for you to fail, and as a result, create more resilient startups. India is getting there. I think we're getting there in terms of sheer numbers. Last year, an investment of 3.3 billion was done into, Series A, B, C funding in India, which is a large number. So I think we will now see that turn. We're seeing one unicorn coming every month in the past 6 months, and we hope that number continues. And it's not 2025 till we get 100 unicorns. So we are up there. I think the US is far ahead of all markets, but India is definitely very, very promising.
Shashank, what's the update at your end? Just for the benefit of the audience who are here and just for the benefit of viewers who will watch the show, you are a disruptor in the payment gateway. What's the update in your business?
So I'll qualify Razorpay as providing broader fintech solutions and payment solutions to businesses. And a great advantage of that is that we get to see a lot of online trends, especially before it becomes apparent in the market, right? So back in 15, 16, I think 15 saw a lot of growth in startup world and a lot of funding that happened. And actually we saw big amount of downturn in 2016 way before it became apparent in the market. And that was a very sad reality. But last 1 year actually has been really, really surprising for me as we have looked through the data and for our firm also. Because there has been a large number of SMEs who are getting established just to leverage the digital opportunity that exists. And these SMEs are not just startups in nature who are, of course, getting created and getting funded, but a lot of companies who are looking to grow sustainably at a good rate year over year. And a lot of these companies are focused on selling one product online or a plethora of products online, like just selling T-shirts or selling something else, but leveraging the distribution that internet provides to reach to a wider base, which was not possible before. And because these companies are attacking a single niche, they are able to create a mark for themselves and build a model which is sustainable in the long run. And that is, I think, a very healthy trend compared to the larger downturn that we are seeing, because it gives an alternate model for growth for a lot of companies, and we fully want to support those companies. So we have really put our focus that how can we build more tools to support companies which are looking to leverage internet as a distribution channel and go and provide them the tools to not just sell online and accept payments online, but also help them with the broader digitization that is happening, that started happening a few years back and will continue to happen in the next decade. So at least from our perspective, this last 1 year and last 6 months have been really amazing. And we have seen a much wider set of businesses coming online than what we had seen in previous 2 to 3 years ago.
Okay. Ms. Ganesh, if I can just draw a parallel here. Rome was built because Romans made roads, right? Britishers built ship and they were able to conquer the world. California gold rush started the economy in that region. Some would argue that the startup culture in India has also been helped because of smartphones, like you mentioned, cheap bandwidth, and also what Jio has done. That eureka moment is behind us. What happens next? What could be the tipping point?
Yeah, so what we are now seeing is that the combination of cheap phones and cheap bandwidth is sort of leveling the playing field across all the cities in this and all the smaller towns in this country. So it's no longer restricted to the urban centers that people are consuming digital content, are able to acquire and whether it is entertainment content or meaningful healthcare content, or to even see the kind of products that they would have aspired to, which they would have only known about but never had a way to acquire those products. So suddenly this whole phenomenon is leveling this market access for people across the entire country. Now that gives rise to a whole lot of new opportunities, whether it is in, like we spoke while we were talking, just creating very exciting content for people to consume in small bites. If you go to the smallest of towns, you will see people may not be reading news or reading any content, but definitely listening to videos or watching videos in vernacular especially. So how do you use that medium to do multiple things? One, for education. Two, to provide good healthcare access to people. And 3, of course, entertainment, access to products, access to services. So that's really, literally a pipeline has gotten laid. And now how do we use the pipeline to get the best for both the consumers as well as for the startups? That's really the exciting moment for us, I believe.
Adhil, when you started this beautiful journey of Bank Bazaar, it was growth. Your DNA was growth and you wanted more growth, and that's what perhaps your investors, they wanted. But looking at the experience of Uber IPO, what's happened to some other recent startup IPOs, somewhere are you getting a sense that the shift now is not growth but profitable growth? Has the word profit now become a necessary element and aspect for startups?
I think in the current scenario, yes. And having seen, let's say, at Bank Bazaar 11 years, it changes through phases. So it was similar in 2008. It was different in 2013. Now it's back again to where it was in 2008. So I think that mood keeps shifting. Is it growth or is it profit? And today it's gravitating to saying profit is also important. I think the moment in fintech in India is that we have taken the products we used to have offline and we're offering it online today. And people are doing business. But the true power of the mobile phone, right, with what's happening, when we're truly able to do paperless onboarding, when we're truly able to use data to offer products to millennials, which previously could not be offered, right? I think the next phase is we're going to build for the internet. I think till now we were taking offline and putting it internet. For the very first time, we're going to use the power of the internet to truly build products for the internet. And that, I think, is going to totally disrupt the way business is done.
Karan, if I look at a great startup like WeWork, one of the most valuable startups in the world, it was a very simple idea. Airbnb was a very simple idea. It started with just 4 guys in a room. Where do you think right now there is a very large trend? It may not be with WeWork, but as a startup investor, as someone who's associated with WeWork, where do you think this is large trend which either is about to get disrupted or will get disrupted?
That's a very difficult question to predict. But in my sense is that, we still haven't actually fully disrupted what traditional brick and mortar businesses can, how tech can actually elevate the brick and mortar industry as it sort of stands. So I think that there's still a lot of disruption and innovation sort of left in that. I mean, it could be anyone's guess, but we see like multiple different startups doing so many different things. To the point made before, I think that you will see new businesses coming out of AI, out of any of the machine learning stuff, and I mean, it's really anyone's guess.
Are you avoiding my questions?
No, not at all. Not at all.
Telling me anything specific?
I mean, it's really hard to predict what will be the next wave. According to me, the next real wave could be environmental impact sort of companies that actually are making a difference to change what the environment and actually, allow us as a human race to actually live on this planet in a much more efficient way without disturbing and destroying everything that we touch. According to me, if you see the generation that that exists currently, or the generation that's about to come, is far more socially conscious and environmentally conscious, and I think that you'll see a lot of interesting startups actually being built with proper profitability, with proper financial metrics to actually make positive impact into our environment and into the planet.
I'll just roll it over to Ms. Pai for the last 2 questions. You have a very deep understanding of trends. So I think what I asked Karan, I would ask you the same. What is the next big thing in the startup space? Where is the next disruption or disruptor?
I think the disruption is really looking at the 500 million today who have not really adopted technology. If you look at it, as a result of geo and smartphones becoming available, to me, anything to do with content, being able to push content on demand in a cheap, affordable fashion is going to be extremely relevant. In all of the emerging markets that I've gone, which is really the rest of the world, the kind of content absorption that happens, gaming, so the startups that are being funded in Egypt, for example, who've actually got exit, are all in the gaming industry, right? entertainment to the masses is going to be huge. So anyone who can crack the code on entertainment to the masses, taking it in an affordable manner, in a manner that can be exchanged, I think that's really where the new wave and opportunity is. Microsoft Research, I was in a meeting with some of the researchers. They have created, and this is something that Satya, our CEO, pushes us to see, what are the technologies that can be, that we can use that will impact everyone as a whole. We are very, very big to be inclusive in what we do. So our research fellows have actually created 4 or 5 different technologies that will impact in the hundreds of millions. One is around content. The other AI, AI for good is extremely important. How do we use our technology for societal impact? In fact, I champion a whole series of Shoka fellows who are going to be leveraging it. So I think there are multiple areas for disruption, not just in terms of looking at it being exclusive, but technology being inclusive. So that's where the disruption in terms of what we see.
Shashank, I'll take the liberty of using my anchor chair and extending the time by another 2 minutes. Is there anything which is giving you sleepless night and you say, "Arey yaar, wo ho gaya to mera dhanda kharab ho jayega"? What is that disruption which you're scared of or you think is about to happen and you're hoping it should not happen for you?
I think, being in the fintech space, it's always the regulations which enable you and also the regulations which scare you, right? And because of the way some of the regulations come out and the notice period that you get, it's always a little bit of scary moment if it doesn't go your way. But mostly we have seen that a lot of sensible regulation has come out in past few years and which has been really good for the ecosystem, and that should continue happening. That's what will enable a lot of digitization to go forward.
I've exceeded the time, so I'll just wrap up this panel with one very simple summary. When we started the event, we were using the word slowdown and pain in the economy very loosely, but after this panel, I guess I would say that not everybody is feeling the slowdown, and the startup community here surely is endorsing something very different. Let's put our hands together for this lovely panel, ladies and gentlemen. Thank you very much, and I'll give it back to Sumit. Thank you very much.